Hey guys, welcome back to Smart Trader. Hope you guys are doing great. And if you're a new member to this particular channel, then go and watch all the videos. If it is helping you, then hit that subscribe button so that you can have some unlimited learning. So in this particular video, we are going to discuss about the different strategies in options. So if you have not watched my previous videos on options basics, call option, put option, and option buying, option selling, what are the basics, then I would recommend you to go and watch the playlist of option beginners in Smart Trader so that you get the background of what I was teaching you. If you already know the basics, then it's fine. You can go with the strategies because we will go lined up with a lot of strategies. So I'll name it strategy number 1, 2, 3, and I'll try to fit in all the strategies in this. So we can do some real-time understanding of this strategies and the theory behind it and the practicality of it. So without wasting further time, let's start learning. All right, so long call and long put strategy. So basically here long means buying, okay? So buying is long and shorting is sell. So here we're going to talk only about buying side, either call option or put option. So what are these and how does it look in theory and practical is what we're going to discuss. What I would suggest a lot of them is do not try to put money and practice this, because during my learning and practice I've lost some money in these type of strategies and understanding them. So understanding them and practicing in virtual trading, okay, or in your paper trading will be more helpful. Once you get that idea, then only I would recommend you. So from my experience is what I always teach, so I like to share my experience. So try paper trading and virtual trading than losing your money. Understand the concepts, that's the reason I'm teaching you everything. Okay, so now in options we can go buy direction, we can go sell direction. Okay, so market is going up, you can make some money. If market is going down, you can make some money. But if market even goes sideways, you can make money. So it can be a non-directional way of trading or directional way of trading. So there are plenty of strategies. When you see the so many strategies, you may get scared, you may get confused, but don't worry. Slowly we will learn. As and when you learn, things will become easier for you. So that is the secret here. So we will go step by step. So now, before ignoring any strategy by saying this is what this will work, this will not work, don't prejudge anything. First see it, experience it, review it, and once you analyze it by yourself, you will know why you should not use it. So therefore, we will not skip any strategy. We will learn all the strategies and then see which is the best strategy or weightage, which is good practically. Then we will take a decision. So first we'll go with the long call option. So this is the theory part. Just go through this theory part. So when to consider this strategy? When the trader is very bullish on the stock or index, that is buy direction basically. So if you are predicting the stock or the index will go up, this is when you have to take advantage. Okay, and what is the risk limited to the premium? Now just look at this theory. I will show you practically what it is. What is the reward? Unlimited as per theory. What is the break even? It is strike price plus premium. Now let's look into the charts. So I'm using a Sensible platform to show you an example. So if you don't have Sensible, you can use it if it's a paid version also. So if you don't want to use paid version, then you can directly do paper trading. So here you have something called virtual trading also, virtual trade. So if you are having the access, you can directly put trades here without putting in the real market and see real-time portfolio movement and all that. So practice here, I would suggest. If not, if you don't want to spend that money for this, then you can definitely do it on a book or on an Excel sheet. Not a problem if you want to save that money. Okay, so example, long call option is nothing but buying a call option. So this is how the chart looks like for buying a call option. Now, like I spoke, what is the risk limited to the premium? So what is the premium I'm gonna give? So if I hit this buy call here, the premium is around 14 rupees is what I am going to give. Okay, so that is nothing but into this is nothing but multiplier lot size. So into the lot is nothing but 39,000 rupees is what I am giving to buy Tata Motors. Okay, this is an example of Tata Motors stock. Now, what is the maximum loss? It's shown here. It is 39,900. So it is limited. You cannot lose more than this money. What is the maximum profit? It is unlimited. So this is what we spoke. Unlimited reward, limited premium. So here what you are doing, you are limiting your downside and your upside is unlimited. So that is basically the strategy. Now, how does the chart looks like? So that is theory, unlimited and limited. This is the theory. We have something like expiry. Okay, so in this example, you see Tata Motors is monthly expiry. So we have 9 days. So as the day goes, you see here, See the graph, what's happening to the graph, it is coming down. So the red one what you see is as per expiry, and the top line what you see is as per today's date. So today's date, this is the movement. So let's say if the stock goes little 6,000 loss, but on the last day expiry you lose 39,000. Max to max you lose 39,000. No matter it goes, stock falls 20%, you lose only 39,000. But if the stock, let's say the stock goes 20% here, you are making how much? 1.8, 1.9, 2 lakhs, so much. So this is what they are saying: unlimited profit, limited loss. So which traders will try to take advantage here? Aggressive traders, right? Because as per theory, this is like limited risk. What is a limited risk? 39,000. But what I would suggest in practical is traders who want to take a risk only will do this type of trading, because the capital what you're putting is only at risk. Okay, so I know that if you're using little of your capital, it is little risk. But person who's trading with 10 lakh, if he uses 10 lakh worth trade, you are at a risk of 10 lakh. If it expires, you are at 10 lakh risk. Okay. And one more thing is break even point. So what is this break even point? Strike price plus premium. So I will show you in practical how it looks. See, strike price is 420 rupees. So your prediction is that by expiry, Tata Motors will close above 420. So currently it is 421, right? If you see here. So according to you, it should close above 420 rupees. So your buy price is like 420. Okay. But you gave a premium of 14 rupees before buying. So add this premium, how much it will be? 420 plus 14 is 434 rupees. So you actually spent 434 rupees is the calculation. So the break event is 434. That is 2.87% away from our current price. So you see here, this is the chart. So on an expiry, if you see here, see when it reaches expiry, that is, let's say 31st is the expiry for Thursday, March. You see here, it has to reach this 434 levels. From here only your profit will start, because your strike price was 420, that you betted that it will close above 420 or go above 420, and you have given a premium of 14 rupees. Very simple. So 434 is the break even point. If you do not stay above 434, you will definitely lose money. Let's say you are at 430, you have a loss of 11,400 on expiry, and let's say max to max you will lose 39,000 here. Okay, only when it crosses this 2.86% from your levels, that's when you start making money. And here time also matters. See, now if you see, when today only 1%, you are making 5,000 profit, but the same 1%, if it moves after some last 3 days, you're in loss of 8,000, because there is something called time value. Because of this time value, there will be a decay happening. Because of this expiry date going closer, the time value is going away from this value. So you are making a loss. Only when you reach around, let's say 434 and above, so I'll keep around 436. Now it reached expiry. So your profit is 6,000, because you are above the 434 levels. So practically somewhere this is the issue, because you are giving a premium of 14 rupees, automatically it is adding up to your buy price, and the break even is going forward by 2.96%. Now if you want, you can adjust the strike price here, you can buy a lower strike price here. Okay, so you see this 400 you are buying, but again here you are giving a premium of 26 rupees, but your break even has come down 426, 421. Anything closing above 426, you're gonna make money. See the chart here, on an expiry you are gonna make some money, right? Expiry, and you're gonna make some money from right from here, 426, 427 levels, right? But the thing is, the catch is, you are given 26 rupees, you are at a risk of 76,000 rupees. See, the maximum loss has increased. So if you try to play here, your loss is going to increase. If you try to go forward, okay, your loss is going to decrease. You see this? The premium, maximum you're going to lose only 10,000, maximum 6,000, maximum 4,000, maximum 3,000, maximum 2,000 only you're going to lose in this trade. Okay, and profit is unlimited. But look at the break even point. Break even point is 16% away from you. Okay, because you are betting that it will close above 490 plus premium. Premium is reduced, the loss is reduced, but the break even is 490. Okay, so this is how it looks. And no matter how much it moves on the same day, the profit also is going to reduce. You see, only 700 rupees, right? As in when you go back, let's say something closer to the strike price here, current price, 1% is 6,000. So everything has an effect. So how much ever you move the strike price, you have an effect over here or effect over here. Okay. So, but to buy one lot, hardly you need is, let's say, 38,000 rupees to buy this Tata Motors, which may be in cash, maybe 6 lakh, 7 lakh rupees you need to buy so much number of shares. You're just giving 38,000. So from that point of view, 38,000 loss is okay. It's considered. If you are very bullish, thinking okay, there is 4-5% chances that this month Tata Motors will go up. It is closing somewhere around 444. That's when you will try to take advantage and make the money. So aggressive traders is what I would suggest will be doing this long call. Break even point, like I told you, whatever the strike price, 420 plus premium 14 rupees what you give, 434. That's how your break even point will come. It's not just blindly you do a long call. As soon as it goes up, it's not just profit. As the time goes, you should consider the strike price plus premium given to it. Okay. So that is the reality of this long call. So it is not that easy like you think. Like a stock you buy, as soon as it goes up, you make profit, goes down, you make loss. If it doesn't go immediately, you are making a loss over there because time will get decayed. But if there is immediate movement, there are big movements, that's when you make advantage and make money. So keep that in mind. Okay? So I would say aggressive traders who are able to take risk, we can do this long call. Same way long put, buying a put. Basically, when you think the market is going to fall or the stock is going to fall. So trader is very bearish on the stock or index. So it's going to fall. Your prediction is going as per this. So then your risk is limited to the premium. Same thing, what you gave is your risk. If you put 10,000, 10,000 is your risk. If you put 10 lakh, 10 lakh is your risk. What is the reward? Same thing, unlimited. Break even is nothing but strike price minus premium. Okay, here it will be minus. So now I will show you the chart here. So we are considering buying a long put option. Okay, the put option is nothing but we are considering the market will go down. So we are buying a put option. This is the strategy. Same thing. Now, if market goes down, that is nothing but if stock or market is going down, let Tata Motors goes down by 2%, you make some money here. Let's say 1% around, you make a profit of 8,000 rupees. Same thing, just vice versa. Okay. Your strike price is 420 minus the premium here. So it's around 408 because you are betting the backside if the stock should fall basically. So you are given 420, it should close below 420 plus you give premium also. So actually your sell value is basically like 408. Okay. So it should go below 408 for you to make some money on an expiry day. So on an expiry day, let's say it went here, you are still around 417, you are in a loss, 415, and anything from 408 and below, you are starting to make a profit. Okay, again a break even point of minus 3.7. So this is the one disadvantage here because you're giving premium, that's gonna keep that buffer break even point. Profit again unlimited. If the stock falls as predicted, let's say it fell 6%, 35,000 profit you are making. You hardly gave 30,000, right? 30,000 is what you gave for this trade, but you made 35,000. And if everything went wrong, the stock went 10% against you, okay, this is against you because you're going for put option. You're predicting the stock to fall, but the stock went upside. Okay, stock went 13% upside. You are making only 33,000 loss. But same way, if it goes how much ever upside, you're gonna make 1.38 lakh, and it continues. Okay, 1.68. That is unlimited profit, and this is monthly expiry based on month on month. 31st is the expiry for Tata Motors. Same thing you can do for Nifty also. You can predict Nifty movements for both call and buy put options. Again, buffer point will come. 0.85% is the buffer because you are giving 138 rupees premium on this particular this. So 16961. So it should go below this value for you to make money. Same thing for Nifty buying call. You are giving 17150 as your strike price. and you're giving 161 rupees. So it has to cross that value. So 17313. Okay, current is 17141. It should cross 17313, then only by expiry. Now in Nifty and Bank Nifty indexes, you have expiry as weekly expiry. That's the reason you see 24th March is a weekly expiry. But stocks have only monthly expiry. So 1 month time you have. Nifty and Bank Nifty has weekly timing. So the expiry happens faster. The time value fades away faster. Your 8,000 you're risking unlimited profit. So what you put is your risk. So if you don't do money management and if you put 10 lakh rupees is your capital and you invest 9 to 10 lakhs, you're risking your 10 lakhs in a single trade, and it can vanish also, because the probability says 35% time you can win, and the rest, how much, 65% chances is that you can lose. How much ever you trade, just like that, 35 times you win and 65 times you want to lose. It's a bad ratio. Is not safe, and this is a naked position. Most traders don't do this. Okay, beginners do this, and initially I have also done it. And this one looks theoretically, this one looks so good, you may go and try it, but practically things will eat your money and end up in negative, or you may end up with max loss also. Okay, so keep that in mind. For aggressive traders, yes, who are very quick, who can capture the movements, predictions, and exit soon, is really good for them, but the chances are very less, 34% chances only. So that was more about this long call option and long put option. So if market is going up, you can make money. If market is falling, you can make money by giving a small premium. You don't have to give 6 lakh, 7 lakh for Tata Motors. You can give 30,000 and take a trade. Okay, so buying a option, that is call option for upside and put option for downside. But you should understand there is something called strike price and premium which is added to it. So break even point will come into picture, and this limited and unlimited profit thing also depends on this break even. Okay, so your stock doesn't move, you are losing money in both these cases. All right, so that was more about this long call and long put strategy. A very simple strategy, but you should know what this is, so that when you use combo strategies, it will be very. So hope this was helpful, and if you like this videos and if you want strategy too and continue these videos, then hit that like button and also subscribe. See you soon in my next video. Till then, take care, keep learning.